What is the Fed waiting for? What are they waiting for to cut rates on their mandate? They want to make sure we have price stability, inflation, which is falling like a rock. We have a huge home price index, the Case-Shiller Home Price Index, which is only for April. It's delayed.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Minneapolis. Let's go. The home of Prince. All right, I'm in Minneapolis. It's my second time here. I was here for the NAM National Association of Mortgage Brokers. Gosh, that was 17 years ago. It's one of the last national conferences before the crash. So Total Expert is a massive CRM, customer relationship management company. And they are based out of Minneapolis. And many large IMBs, independent mortgage bankers, their CRM, the largest market share CRM of IMBs, is with Total Expert. So this is their Total Expert Accelerate. This is their once-a-year event, and they do a great job. Joe Bellew, their CEO, is fantastic, amazing operator. They're investing. They're going to get it right with AI, bringing customized marketing automation at scale, and I think it's great. So Tracy Sliderman is, she is like amazing. Like this event, like she is their events coordinator for all their stuff. Was just with them, and anyway, Prince is from here, so that was a Prince song, Kiss. What's going on this week? It's Monday night. It's not crazy busy yet, but there's a lot of data coming out this week. So let me just remind everyone: we buy and sell money. We buy and sell money. That's what we do. Now, the secondary market looks at our business way different than you and I do. Like, we look at it like we're fostering the American dream. We're helping people get a house. It feels good. It's relationship building. Originators and realtors have a place in this ecosystem. The secondary market, hedge funds, Wall Street, they look at this business differently. So don't you forget that. This is how it is. And you know how it is when you talk to people and they're not like us at the street level. So the cold, heartless, unforgiving secondary market is all about money. So I'm going to talk about that for a second. We buy and sell money. Yes, there is a borrower that is an investment grade quality investment that will pay, and the land and home is the collateral in case they don't. But when you see a mortgage-backed security, that is money. We buy and sell money. That's what we do. Okay? There's $6 trillion of money on the sideline right now, not invested in the markets, not invested in stocks, equities, mortgage-backed securities, treasuries, MBS and treasuries, fixed income securities. There's a lot of money out there on the sidelines. The initial public offering market, IPO market, it's kind of slow right now. Money is waiting for the Fed to say, okay, we're going to loosen rates. We're going to cut rates and make money cheaper to borrow, and we're going to grease the skids of the economy. And what will make the Fed do that? They want to know on their try mandate, which a lot of times you hear is a dual mandate. By the way, look at this gorgeous sky over here. I don't think I can zoom in or here. No. I'm in Minnesota, and yep, I see you, buddy. Little guy in his scooter. It's 8:45. Last night I landed at 9:45, and it was like light, like sort of light out till like after 10. It's kind of crazy. So the secondary market buys and sells money, and mortgage-backed securities are a not so risky asset. But the flood of money, the velocity of money making our economy grow, the money supply growing. What is the Fed waiting for? What are they waiting for to cut rates on their mandate? They want to make sure we have price stability, inflation, which is falling like a rock. We have a huge home price index, the Case-Shiller Home Price Index, which is only for April. It's delayed. Like, we're in June. We're getting data from April from the Case-Shiller Home Price Index tomorrow morning. So that's a huge component of inflation. It's a little dated, but we know inflation is falling like a rock, especially auto insurance and auto prices and other non-housing services. So what's the other part? Full employment. Labor is softening. It's not weak, but it's softening. So we don't have wage inflation. We have, elevated jobless claims every week. We have a higher unemployment rate. But the 30-year fixed mortgage is the third part of the tri-mortgage. Money. Buying and selling money to fund our government. Buying and selling money in the form of treasuries to fund our budget, our debt and deficit, which is enormous. So the 30-year long bond, the 10-year treasury, the 10-year note, and then, of course, 2-year in under the bills. We look at those yields to see the price of money, and the dollar is strong right now. And so we have the personal consumption expenditure at the end of the week. That is the Fed's preferred measure of inflation. It's actually called the Fed deflator. It's a big deal. But the flow of money also depends on the growth of our economy. We have our final read for Q1 gross domestic product, GDP, coming out this week as well. I think it's Thursday. I think it's supposed to be between 4.36 and 4.6%. 1.36 and 1.6%. That's a huge surprise because of 1.6. So anything less than 2% in a quarter is contractionary. 2 quarters in a row used to mean recession. So we're going to be 1.46 or 1.6% GDP for Q1. That is the number we're looking at to see if the flow of money needs to have more easing from the Fed and them cut. So big data points coming out this week. That's it. That's all I got. Nothing else. Hope you're doing well. $1.75 trillion in money market accounts, people sitting in cash, which cash is earning less and less. So let's get that money to work. Let's put money back into the economy. People are afraid to do that if they think the economy is slowing. They're afraid to do that if they think rates are too high and housing prices are too high and the cost of eggs are too high and milk and everything else. People pucker up, and 70% of our economy, our GDP, is consumer spending. So if demand slows and GDP does not grow, the Fed will have to act. That's where we're at. Other than that, we're all very blessed and lucky to be here. If you have your health, you got no worries. Cheers. Hey, it's KP coming to you live from Newport Beach. Summertime. Monkeys. My son has double pink eye, hanging out with his buddy. They're watching Darman Studio videos. Pool time. That's my little daughter, Serafina, and her friend Lennon. Lennon, what did you set it down here? What am I looking for? There's a beetle. There's wifey. Wifey getting after it. Okay, PC is out. That's it. That's all the fun you get. It's actually nice. The sun is out. No complaints. I have something to say about inflation. Next week's Jobs Week, by the way. But let's talk about inflation that's falling like a rock. Now, whether it's sticky from here or it'll never go down and go up a little bit from here and we didn't get the rates we wanted or whatever, all the negativity. Let's talk about the real negativity. Remember in October or even the first quarter, we had 3 months of, heightened inflation. You know who's really wrong? is all the people that said we'll have 10% rates and 8% 10-year treasury. Dude, you guys were wrong. Like, you were so wrong. Like, you weren't even close. Just saying. So anyway, inflation's falling like a rock. The PCE, the personal consumption expenditure, came out and said we're down to 2.6 in core and 2.6, I think, headline inflation. So that's a good number. And let me just kind of frame that. I haven't broken down all the internals yet. And if you're wondering why I'm doing this, why I'm driving, talk about AI. I was asked a question on Rick, Jeremy, and Brock's podcast on LinkedIn, which you can go see. They're talking about AI. Like, the ultimate AI is my Tesla. Like, this car is driving right now. I just have to touch the wheel every now and then. And I'm compressing time. I'm able to record my video, upload it while my car drives me to go meet with Roy Stocking. Look at it. It's looking. What is kind of creepy. Look at this. It sees this car over here. Now, I would have gone. I would have absolutely gone. I am super aggressive. I would have gone. And there's this car right here that's trying to leave. I would have just cut them off. I'd already be on my way. But this AI is so safe that it actually waited for that. And here's another example. I would be weaving right here through that car. In fact, I'm going to disengage it and just do it because that's how I drive, like an asshole. But the death rate for AI on Teslas is like 500% better than non-automation, so human drivers. See, it's even telling me to touch the wheel because it knows in my eyeballs that I just leaned over with my hands off, one holding this phone and one here. Anyway, AI is going to disrupt the world. Yes, Microsoft Office Copilot, ChatGPT, Insight Social Coach, creating content, video at scale. But right now, for 5 years, my car driving me is a game changer for my productivity. And if you have an elderly parent, you could give them mobility. If you need a designated driver, you can do that. Look at this. I would have ripped my gas pedal and blown through this yellow light. I might have hit this lady right there, this guy. I doubt it. I saw them. But this car gently stopped. Anyway, AI is changing the world. So the personal consumption expenditure, the internals, I have not read them yet. I will see them later tonight. I have not looked at it. I just know that inflation continues to fall like a rock. And the 40-year average of the core PCE is 2.4%. We're at 2.6. Okay. So I don't think the Fed will cut in July unless jobs weaken significantly. And next week is jobs week. And even though a lot of our companies are closed expired for July 5th, the markets are technically open, as is the Bureau of Labor Statistics. So the June jobs report will be released the first Friday of July. Next Friday, July 5th. Weeks over, months over, quarter is over, half the year is over. By the way, this thing just totally cut off this Range Rover behind me. I don't know why. It's not the best driver. Oh, it's got me turning right here. I didn't even know that. Okay. I'm gonna course correct here. It's kind of cool. Like, you type in where you're going, and then it drives you based on where you enter in the GPS. Okay. So inflation's down, it's coming down, it's not going up because labor is softening. How much is labor softening? That is the real key. How much is labor softening? Because that will be the telltale sign for sure. If wage inflation and labor continues to soften, then we are going to see the Fed get a little more dovish and worried about where the economy is going to go. Speaking of economy, slowing growth, 1.4% GDP Q1. I can't wait to see the Q2 read in the coming weeks. Remember, there's like 3 reads, right? The early read, the redefining, and hey, sorry, I had another call. and then the final print. So we got the final read, 1.4%. Remember when less than 2% for 2 quarters in a row meant recession? Oh, we gonna be talking about recession all of a sudden again? We could. So anyway, I digress here. Okay, look at this. Watch, I can change course right here. Pick that one. Run another orange light. You're welcome to steal that joke. Look at this. Look at how I am way more aggressive and worse than AI. Look at this guy. He's like me. Okay. All right. Enough rambling. There's a lot of money on the sidelines in the stock market. I think as much as $6 trillion in cash and cash equivalents, 1.75 at money markets. Stock advice. I'm not a financial advisor. Not responsible for your profits. Not responsible for your losses, only your profits. There's some great stocks out there, mostly enabling tech, which is very disinflationary. So we are going to have a labor shortage at some point in our country, and technology helps do that. Look at this guy trying to take me out right here. Look up. He doesn't realize. Look at it. Well, I could do this all day long with the auto, the full self-driving. It's kind of fun. This guy's aggressive. See him hauling ass up there? That's normally me when I'm not on AI-enabled self-driving. But again, the Tesla brakes. It's very safe. Okay. Tom Lee from Fundstrat, which I subscribe to his content, he's kind of seen as a perma bull. I think that's unfair. He is an analyst. The market wants to be a bull. We all want to grow. We all want to do more, be more productive, and give the society, put people in houses, and make money. And so he had a very interesting take. He said that 2 other times in history we're in this phase, working people aged 30 to 50, well, that segment of our society is growing. So we know about it in housing. We've been talking about millennials and Gen Z for a while. They borrow more money. Borrowing spurs the economy. When they get to 30 years old, they've collected a little bit of wealth. They get into a home. We know the first-time home buyer age is 33, maybe 34, 35, depending on what report you read. It was as high as 36 when rates were spiking up. People borrow against their house. They borrow against their equity. They spur the economic engine. He thinks the S&P 500 will triple by 2030. Think about that. So if you just simply were in index funds and you're saving money, he thinks in about 6 years you could triple your money. That is massive returns. So please save, please invest. The uber wealthy did not get rich from real estate. They are rich from stock equities. So, by the way, I'm on day 3. Haven't had a cocktail since Tuesday night at the Total Expert Accelerate. I am doing a dry July, not because I have any kind of alcoholic issue. That does sound like denial. I am very well aware of that. My fitness coach, Justin Rutledge-Chopper, is connected to me. He's been wanting me to try a fitness challenge, which includes no drinking. So I'm going to go no drinking for 30 days and stay fit. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.